Institutions are buying the Bitcoin dip. I'm live in New York City at Bitcoin Investor Week and can confirm that institutions certainly are not bearish just because of the price action. We're going to unpack that and everything that's happening here with Andrew Tillman and Bill Barhydt right now. Let's go.
Let's go.
What is up, everybody? Here we are live at Bitcoin Investor Week. Chelsea Piers on a very frozen Hudson River in New York City. And I can tell you that the vibes here are extremely positive. Really a huge difference between what you see between retail and institutions at the moment. We're doing a live show. We didn't have internet there for the 10 minutes when we were supposed to be going live, so apologize for that. But I've got very familiar faces here. It's like a Tuesday on a Thursday. We've got Andrew Tillman and Bill. Bill, I think that you can probably confirm what we're hearing here. The title is based on a tweet that Hunter Horsley, the CEO of Bitwise, sent. Basically said that 2 years they've been talking to a client. They finally saw the price recently, bought $11 million worth of Bitcoin, viewing it as an opportunity and not the end of the world.
Yeah, I mean, it's indicative of what we're seeing here. First of all, the vibe here it's nothing to do with price. Everybody's talking about tokenization. So institutions are so bullish right now on the future of crypto. It's just like fait complete that this is the future of the industry. It's amazing the shift in the narrative over the last, 90 days even, from it's all about price to we're getting Clarity Act passed, tokenization is coming. Look at what the SEC and what Atkins and Besson are talking about on a regular basis. I'm shocked. This is the first time that I've gone to a crypto conference of any kind where the price is in the middle of a 50% drawdown and the aura is just pure bullishness. Like, I've never experienced that in crypto before. It's fascinating.
Yeah, quite literally nobody cares.
Nobody cares. I haven't had, the only time we've had a discussion on price is if I bring it up.
Yeah.
Which I almost never do. So it's amazing.
That's really because you don't hate fun and you don't want to be tortured.
Well, we were out late, but yeah, that aside, no, the narrative shift is real. It's really about building. It's about, people just believe it's going to go up. And I'm not saying that's just hopium and that there's not possibility for more drawdown, but people really accept the fact that this is the future of finance here. I've yet to have a discussion where, and this is a lot of TradFi people here, right, who probably were skeptical 2 years ago, but no discussions around, is this going to happen? Are we going to be migrating systems to be, using tokenization or DeFi for yield? It's just, people get it. It's remarkable.
Yeah, it's become a foregone conclusion. You guys are literally meeting with either existing clients or future clients all day. We're here, obviously, in the Arch public booth, and I've seen it over and over and over again, and people are more excited now than they were when prices were high. I've had the conversations. Everybody here watches our shows, and it's like Tuesdays and Mondays, man. Macro Monday, Dave versus Mike, right? But I get it every single day, and they're all like, I feel like it's finally time for me to really start buying the dip, which is funny because the tool is made to just buy regardless. But if you can start at 65 grand or 67, wherever we are.
I think your sentiment in the crypto space is directly correlated right now to how much cash you have on the sidelines. If you have a lot of cash on the sidelines, you're exceptionally happy and you look at this as a buying opportunity. If you're over allocated at 126, then you're crying right now.
Spoken like somebody who enables buying the dip.
Yeah. Well, I think when you get into this sector specifically, you start hearing everybody talk about volatility being an asset or a feature, if you will. Yeah, of course. I think a lot of people don't know what that means, and they don't understand how to appropriate action towards that. I think that's really why we're seeing the response that we're seeing from an Arch Public perspective, because the tools make that very easy, and it appropriates capital in a way that's much more prudent than emotion typically dictates. So it's always about how emotional am I and how overcommitted am I? And then when you have these large drawdowns, if you have been prudent in your allocation, then you're looking at it as an opportunity, right? This is where you make all of your money on the buy side, not on the sell side. So.
Yeah. So this is obviously, I think, a more institutionally focused
That's right, yeah.
conference, right? Everybody here is in a suit, family office. It's not like Coachella in Vegas, right? Where it's just
What do you mean? I wore this to Coachella.
You look. This is how Bill dresses to Coachella. But that said, Andrew, when you guys are having conversations now, you gave your talk obviously on Tuesday. Do you find that you're having more conversations with family offices and institutions than you are necessarily with random guy who wants to buy Bitcoin?
Yeah, and so I'll get to my favorite subject and won't waste any time.
It's Larry Fink.
Right? So what did BlackRock announce yesterday, right? That they're finally opening up their BUIDL portfolio. They're doing it on Uniswap. The level to which BlackRock is leaning so hard into tokenization, RWA. They've moved now significantly beyond Bitcoin, right? They have 2 Bitcoin funds now. Now they've opened up their BUIDL portfolio. They've opened it up on a DeFi platform. I mean, we're talking. They have to have meetings there on a weekly basis in some closet, and there's a bunch of BlackRock degens that are part of what's going on there. Because 5 years ago we were talking about DeFi and trading on DeFi. The word degenerate is applied. Well, BlackRock has now put together a portfolio that grew from 300 million to 1 billion to 2 billion to 4 billion. Now it's available, and you can trade it on Uniswap. Yeah. That's extraordinary. That is, if you want a harbinger of things to come and why you should be invested in this space, hard, not difficult to figure out, follow the leader.
Well, I think to your point, I don't think most people know what Uniswap is. And yet BlackRock is using them,
Right. That headline could have been some random meme generator output 2 years ago. And now it's an actual
it's a real thing.
Headline,
it's a
right?
real thing.
Like Babylon B.
Yeah, exactly. I'm serious. Like people would have just laughed. Ha, okay, kind of funny. But it's a real headline.
So what are the mechanics of that? I would have dug deeper than the headline, but I was at a club with you guys last night. But is BlackRock actively have to buy Uniswap to
I think they announced that they did.
Liquidity
I think they announced
provider
they did. I think there was a spike, if I remember correctly, in Unitoken after
That's
they
correct.
announced that. Not a huge one relative to how far down we are, but
that's the market, though. So I remember DTCC made the announcement that they were obviously going to tokenize everything. They got the no action letter, and then they announced Canton Network as their partner. And I was on the show every day, and I was like, are we in such a bear market that something as nascent and unknown as Canton Network gets mentioned by the largest settlement house on the planet and doesn't go up? And then it did.
Right.
Yeah.
But weeks later, maybe this is an opportunity
I
to
find
use
it,
swap if
it's so ironic in a sea of decentralized systems meant to have no off switch and stick it to the man that one company has literally completely saved the narrative of corporate crypto, right? I mean, if it wasn't for Larry going all in on ETFs and now on DeFi, right, the narrative sea shift would simply not have happened. Now, personally, long term, I think it won't matter because I think they're all going away. And I think everybody watching probably thinks I'm completely full of crap when I say that. But I do genuinely believe that. It may take 10 years, and in the meantime, thank you very much for what you're doing. But I don't think it's going to matter long term. But I think it's great. I'd rather work in a sea of positivity than have to fight a sea of negativity, regardless of what my convictions are, right? Because I'm a positive person in general. And I don't want people basically telling me that what I'm doing is nonsense all day, right? But my conviction is the same regardless. It's just amazing what BlackRock has done for corporate crypto.
Yeah, I don't know if we would have had a Bitcoin bull market without it. No. Matt Hogan has the, it's been crypto winter since January 2025 theory, and the only reason we saw a spike was ETFs.
Right, I was going to say, you could also make the case we didn't have that regardless.
Yeah.
I actually don't think that we had a bull market yet, the way Matt's describing. I think we had a spike caused by the legal, kind of perpetual legal drawdown we had because of the Warren cabal, and we had the run up before that because of the ETFs back in, I guess it was 24 when Gensler approved them, and that was BlackRock. I think last year what we had was an initial spike because of Trump, and then the liquidity never came, which we've discussed multiple times on your show. And I think it's coming this year. So we're going to have convergence of narratives. We're going to have the tokenization becoming real, right? I predict we're probably at, not including stables, we're probably at 20 billion in RWAs on chain right now. I wouldn't be surprised if that doubles every 6 weeks, which could easily put us at $1 trillion. this time next year. So, every 6 weeks, 2 to the 10th power, right? 1024, that actually puts you at over $1 trillion, right? And so that's a remarkable number. At the same time, the liquidity is coming, right? We have very high unemployment. It's basically a tale of two cities between AI, which I'm sure you want to talk about given what I've been working on, between AI and non-AI, and that's going to cause the government to have to do stimulus checks, right? And so last time we saw that, retail started to participate. So I think we're going to have the convergence of money coming into the system, the AI narrative merged with crypto, and the tokenization narrative all coming together at the same time later this year.
Why don't you think retail has participated? It's pretty clear now, right? We thought we had all the narratives that we wanted, but they just have not been.
You can't spend what you don't have.
That's exactly right.
You literally can't spend what you don't have. I mean, you can with credit cards, but right now
that comes due eventually.
Yeah, right now everybody's playing with Kalshi and just during the Super Bowl and betting on is Bad Bunny gonna, Bugs Bunny, whatever his name is, gonna say this or that, and that's fine. But the real money is coming to retail, I think, later this year, and I think that. I think this convergence is going to be a big deal. I really do.
What do you guys think?
I think the market's grown to a point where retail doesn't matter anymore, to be honest with you. I think, in previous cycles, you kind of saw the power of the industry being controlled by various players. Miners were the first players that controlled it. Then you had the exchanges, and predicated on whether they launched a specific ICO or held a token, they got a large amount of volume or market share based upon that. I think now it's Wall Street, and I agree. I haven't thought about it the way that Bill just described it as it pertains to the bull run and the fact that we may have not even started it. And so how can you say we're in a bear when we've had, the
Well, we would have to say we've just been in a bear for 4 years.
That's right, but what a hell of a bear. If that's a bear market, then what's the bull going to look like is, I guess, the point. And I do think there is a lot of crosswinds that if they can unify into a tailwind, this thing's going to make up a lot of ground very, very quickly. And we need to, because I don't think there's a stronger opportunity for America to rebuild its middle class than with crypto, specifically Bitcoin. Because it's such a powerful tool to take back your purchasing power over long periods of time. And if you look at how we've built our country, it's been on small businesses. It's been predicated on entrepreneurism and the people who really are out there pushing the boundaries, like Bill. When you disincentivize that group of people based upon how hard it is to start businesses, how hard it is to pay taxes, how hard it is to hire people, all the headwinds that you face, you need something like a Bitcoin that very quietly stacks the deck in your favor. And over time, if you're prudent about the way you allocate your capital as a small business, that purchasing power comes back to you tenfold. And so I look at businesses like Dillard's, JCPenney, you can name 100 that have been staples of the American economy at certain periods of time. And just like any business, they all die eventually. So what happens when you die? What are you left with? Well, some companies are left with real estate. Some companies are left with a bunch of cash, like GameStop. Some companies are left with Bitcoin. And I think that's going to the 10-year narrative that we're going to see play out. And the results of people who are prudent in that decision making is going to be phenomenal. I think we're going to look back and go, it was so simple. Why didn't we just focus on the basics, basically?
This whole narrative of the wealth transfer that's coming is something that's been a pretty consistent hallway discussion that I've been having here. People have approached me like, can you explain what you mean when you talk about this whole idea of like the big RIA wealth transfer that's coming? And it really scares a lot of people here because they don't focus on it. Like, they don't understand our world. They don't understand the impact of tokenization or even of Robinhood, right? They see Robinhood as a toy, and I'm like, Robinhood's managing $200 billion.
Sure.
We're managing 10 figures now. And so, it's like, hey, come on. These kids are not going to use your boomer RIA when they start inheriting the 10 trillion. They're going to put it in crypto and in tokenized equities. They're going to put it in SpaceX because it's what they understand.
I mean, Robinhood literally bought Trade PMR, which is my friend's custodian and RIA. It's been almost a year ago now, because they see that.
Yeah.
They want to be the next generation's RIA, and they know
Right.
that nobody's going to go to their dad's RIA to manage their money
Absolutely
on a
not.
60-40 portfolio, and
Yeah.
that's where the puck's moving. You might not know, but Andrew's literally the king of the RIA. He
Well,
is founder of
you know,
Advisor Hub.
Yeah, so
It's promoting Abra, right?
yeah, that's right.
Yeah.
That's right. So there's one stat that I saw maybe 2 weeks ago. I think Caitlin Long's going to be here today, if not, but she's scheduled to speak today, and she put out a stat that said, in bull markets, dollars that went to Coinbase off of other platforms, 0% of that money came back to those other banking platforms. It all stayed on Coinbase, right? So that is a smaller version of what Bill's talking about. That ultimately the next generation will find different platforms that they feel like they have more control over, right? They don't want to meet with their dad's advisor, to have some, sloppy lunch and talk about their portfolio, okay? That's not the world that they want to live in. They want to have instant access to everything and be able to do everything and not have to necessarily talk to anybody about it all the time. They don't want a permissioned platform, they want a permissionless platform. And so some of those stats associated with Coinbase make a lot of sense.
Well, I think the value propositions of the RIA, just like the 60-40 portfolio, are
That's
dead.
what I was just going to say.
I think, why are you going to pay a 1% management fee for somebody to do something that literally...
To buy treasuries.
Not
buy treasuries.
not only to do the 60-40, but to put you into their company's product
That's exactly
exclusively in a formula that has nothing to do with your own personal goals.
Right.
Like, are you high risk, moderate risk, or low risk? Okay, here's your portfolio. Thanks for the 1%. It makes no sense.
Well, but that model worked when they were the gatekeepers to access those opportunities.
This is the point.
Now, the technology is breaking down the access barriers. If you look at any major company on the tech front, they're addressing access in some form or fashion, right? And so the financial system is about access and has been. If you weren't invited to an IPO, you weren't getting access to that IPO. Now that whole narrative, everything's shifting, and the next generation isn't going to take no for an answer. They're going to do it with or without. They're going to do it on the back of tech.
Yeah, our entire thesis at Abra is based on what you're saying. So the fact that there's a $10 trillion wealth transfer coming from the boomer generation to the non-boomer generation who doesn't want to use your boomer RIA, combined with the fact that everything is going to become tokenized, literally requires a new type of RIA/bank. And the average RIA doesn't even understand what I'm talking about yet. Now, some of them are getting there because we've been quietly talking to them about this, like Bitwise and others, for 5 years, literally years. But the average conversation is more like, hey, when we talked last year, you brought up Solana and I bought some, thank you. Thank you for the recommendation. And I'm like, well, what about your clients? They're like, oh no, can't do that yet, right? And so that's, they're starting to get it, and they are worried, especially the younger ones, because they understand crypto, they understand Robinhood. The older ones don't get it, right? But it's coming regardless. I think this migration to tokenized systems, when you tell them, look, I believe that you're going to basically see tokenized equities en masse in the West in 24 months. And they look at me like, that's just physically impossible.
The DTCC said it.
Yeah. Now I think they're going away too, but it doesn't matter. The point is everyone who's been studying this gets it. The question is whether or not they're going to matter when it happens.
Yeah. But I don't know, did he tell you his ClaudeBot stories? What's it called now? ClaudeBot, OpenClaw?
OpenClaw, yeah.
OpenClaw? So Bill's an old hacker, like original. And you've basically...
You could just say hacker, you don't have to say old.
Old. He's a really old guy who learned to hack. When they used to hole punches? And
yeah, exactly.
Can't be that old.
Okay,
Hacking.
but seriously, so we were together last night having drinks, and you basically said you haven't slept in 10 days because you have now programmed this thing to run most of your life, right? I would love you to share that because I'm fascinated, but B, where does that then come into play with this as you've actually experienced it? You're the first one I really had a conversation with who's actively doing this.
Look, I've been saying for a couple of years now that the future of finance, I think the future of everything is going to be integrated with AI, whether it's cars, a house, or your bank, whatever. But for me in the last 2 weeks, the first time that I've truly experienced it integrated with my life, with my job, has been a truly remarkable eye-opening experience. On a whim, I downloaded the OpenClaw stuff. I went to GitHub, I installed it. Not for the faint of heart, I have a background in computer science. Please don't do this if you don't have a background in computer
I would
science.
hack myself so
Right,
fast.
exactly. So I had to lock down like a machine with VPNs, with firewalls, and then I basically started giving it access to different things very quietly in kind of a sandbox environment. And it would come back to me with summaries of things that I'm working on. I'm like, how did you know that? Like it would even have code names for projects that I've never discussed with anyone because it's going through my documents, through my email, through my texts, and it's basically giving me suggestions on how to organize everything. It's coming back to me now. I've set up voice, and so I had to turn it off now, but it'll call me proactively to tell me you have an emergency email from so-and-so, should I respond? And I can just say yes, right. And so it's in 10 days, it's become the best chief of staff personal assistant I've ever had, and I've had some good ones. And I'm a nightmare to work for. And that's the other thing, like I don't get any complaints, right? So, you know, and so that's fantastic. But now as it relates to what we all do, I think if you can have personalized portfolios, if you can basically, you know, do real balancing, not the RIA, okay,
Every 6 months.
Here's 58% bonds, here's 54% bonds, and here's 48% bonds, but a real look into your life, your liquidity requirements, your lifestyle requirements, and have an AI financial assistant / planner that's integrated with an RIA as a fiduciary. You still have a person that's, you know, on the hook for that fiduciary. I think that's a killer business model that is going to take off. I've never been more convinced of that as I have in the last week.
I've never been more convinced that I'm completely screwed than talking to you for the last 14 hours.
We all have to add value.
I told him, I was like, the first thing you need to do is just start a business selling the firewall.
Right.
That nobody else knows how to build.
That's a good point. Well, I think I've been playing with it too, and it is dangerously addictive. And I will say, the intelligence, having it be able to take a 50,000 foot view of your entire life, you get a lot better insight. But I think the future of those types of techs are going to have to be built on proof of work networks because of the vulnerability from a security perspective. I don't think there's another way to secure that type of information at the level that you would need to and at the scale that you would need to, other than a proof of work network.
But the other point, and it's tangential to this, that really hit home to me is I've set up multiple agents that are running in the background doing different things. And I'm looking at this going, okay, would I use an Oracle database or some SQL-like database ideally to do this for the things that are running out on the internet? And the answer I keep coming to is no.
Nope.
I would use L1 technology as a transaction processing layer and have the agents automatically integrate with them. As a matter of fact, if I just said, do whatever the path of least resistance is to being always on, having no off switch, and being able to do what you have to do, it would automatically figure out that Solana, Sui, Aptos, Algorand, whatever is the right way to do it.
Well,
and
even
then,
those agents are now paying each other in crypto,
Right.
because there's no other way to pay.
There's no other way to do it, that's right. They can't open bank accounts, they can't, use PayPal, they can't do KYC, it makes no sense, right? So this is the kind of second coming of crypto to me, is this convergence where crypto acts as the transaction layer for AI and the agentic web.
Well, in the short term, what you guys are describing and the level to which you find it fascinating is the reason why there's not a significant updraft in prices in crypto right now, because everybody with capital is doing this and they're thinking, I need to invest in this space right now. So I'm shifting capital, away from the idea of crypto as an industry and into AI. Now they may reconverge at some point.
Well, they have to.
But in my mind,
But how does retail invest in AI right now?
Yeah, exactly.
Well, okay, so the Nvidias of the world, the stocks associated with it.
But most retail believes that ship has sailed.
Sure. My point though is that the fascination with the technology is taking mind share away
100%.
from crypto. Now that will pivot. There'll be another pivot at some point, but I do think it's interesting to be aware of that.
Yeah.
It's also really expensive.
Yeah,
How much have you spent in 10 days?
A lot. Yeah.
Well,
Yeah.
again, that's kind of my point. So folks that are in a position to bear that expense are the investor class. the investor class is then saying, if I'm spending this amount of money to learn about this stuff, to play with these toys, wait a minute, these aren't toys, this is meaningful stuff, I'm going to shift some capital in this direction as well.
Well, it's the first time when I started playing with it that the statement that I heard last year of, we are on the precipice of seeing the first $1 billion one-employee company, this gets us there.
It's going to be Bill.
Yeah, that's exactly right.
As his sidekick.
Well, you just horrified my entire staff. But that's okay. And it's not true. Yeah.
No, for his next business.
My next business,
selling
yeah, with all my free time, exactly. Selling firewalls, yeah, I can do that. Look, I've never been more excited about the convergence of crypto and AI. I just became chairman of Algorand, not because I need more to do in my free time, but because I really want to be as close as I can to this convergence. And I think understanding the developer community's needs, look, my day job is wealth management now. I basically work with high net worth investors and family offices to allocate their assets into crypto, help them borrow against their crypto holdings, help them buy more crypto. What the hell does that have to do with the developer community? Well, I think it's that those layer one technologies that the developers are going to take advantage of, which is what's going to drive the value of what I'm recommending as a fiduciary to my clients. And this is putting me right in the middle of it, which I couldn't be more excited about. I've always said, if you want to understand where it's all going, follow the developers. And right now, the developers are super excited about the AI bots, agents, and there's a growing army that are excited about the convergence with crypto.
Yeah, I think the developers that I'm talking to are equally excited about information on the blockchain. Blockchain, from a monetary perspective, is obviously very important, but when you start talking about storing data on chain, it's been a difficult subject to address and to tackle over the last 5 years, and it's becoming much more easy to address those things. And when you're talking about real world assets, you're talking about online value, you need some third-party agent, an oracle of some type, to validate that data before it gets written in stone forever on the blockchain. And I think we're starting to see a lot of push in the development of those types of technologies. And I think the integration of DeFi natively, like we were talking about a couple weeks ago on our show, it's going to be so seamless. The users aren't going to know that it's there.
Yeah.
But they're going to see so many benefits, no different than, it reminds me of the first time I ever got an iPhone. The thing that blew my mind was before I did anything, I turned it on and my addresses, my contacts. Do you remember the old days where you'd lose your phone and you lost all your contacts and you had to literally call everybody and be like, what's your phone number? That was the moment where I realized things have changed forever. This thing is smart enough to know that I have contacts, and it's going to remember it in the cloud. And a lot of people didn't even know they were using the cloud. But that cloud technology enabled all that functionality. That's what I see we're on the precipice of in the blockchain space.
I remember buying a new iPhone and plugging it into my computer to back it up, and then the computer saying that it wasn't compatible with the new iPhone, so I had to buy a new computer to be able to sync and use my new iPhone, and that's when I realized Apple was a scam.
That's genius.
Well, that's coming. This agent isn't compatible with that agent, so you've got to spend 10 grand to upgrade this agent to be able to talk to.
So listen, from the Algorand perspective, you probably know, first of all, I hadn't even seen that news, so congrats.
Yeah, I didn't either.
Thank you.
And RIP to the remaining sleep that you have.
Yeah.
And I was talking to Jordy Visser about this yesterday. We have this stablecoin tokenized world that's obviously coming, but who's going to solve the interoperability problem? Like, what if you build on Algorand and then it needs to talk to Solana and the other person? So the agents are going to just basically bridge it?
I used to run an enterprise software company when I was an EIR at Kleiner, and the whole goal of the company was to facilitate web-based integrations between your Oracle instance and your SAP instance and your IBM data, and get it all to talk to each other. And you would buy these $1 million software packages called Enterprise Application Integration Software. And now it's just going to be little agent bots running around the ether, proverbial ether, that are just going to basically make the data integrate, and it's just going to happen. And you're not even going to know who programmed it because they're doing it themselves.
Yeah.
Yeah.
Scary.
Programming at scale is now instant. The agents don't need to go and test, and it's not a sandbox environment anymore. It can be done live, in real time, agent to agent with very little counterparty risk.
Yeah, I mean, Andrew, though, in this world, if these institutions get replaced, I mean, literally what happens to the BlackRocks of the world in a
Well,
situation like this?
we're a long way off from that. I mean, BlackRock is a $12 trillion monster. Decentralizing that type of capital, we're talking about probably 2 to 2.5 generations
Yeah, I agree
to
with
get there. But ultimately, we get there. What does it look like? Man, that's really difficult to say. I'm not a futurist type of guy. I haven't thought that through. But I do know that, again, over the next 10 years, the shape and the look and the feel of finance and how we interact with finance is going to materially change. If you think about that Biddle portfolio, one, everything that's in it, and then two, their now deep engagement with Uniswap. If at its base case, what BlackRock is doing is using that as a sandbox for when they finalize their tokenized new, stock exchange project, well, I mean, listen, that is such a material and huge shift in finance. To me, I saw another post a few days ago where somebody said, oh, well, if crypto's only meaningful use case was to make big changes in finance, well, that's what's the big deal? And the response was, oh, so it materially changed quadrillions and quadrillions of dollars of money, and yeah, that is a big deal, right? And so the promise of crypto making a material difference in a big, huge, touches everything industry, we're right there, man. We are on the precipice, and it's exciting. It really is exciting.
It does have a lot of unintended consequences as I kind of like game theory out what that looks like. If you think about the risk from a financial perspective of our current system, we do a great job of siloing risk so that it doesn't spread. It's going to be very difficult to do that in the next iteration of the financial markets because everything will be collateral for everything else. So if one silo gets, breaks,
Yeah.
it could have a cascading effect.
Yeah.
Which
I might put it a little differently. I think we've done a good job of socializing
There you
risk
go.
at the expense of the middle class. If you look at the 2007, 2008 crisis, all of the risk that was allowed to happen by the banks was simply socialized.
Communism for
Yeah.
me and social and capitalism for me. Yeah.
But I think your point about BlackRock is correct when you talk about a couple of generations, but I actually think where they become less relevant over time is the new money, right? So if the agentic web, if the migration from RIAs becomes in 10 years worth 30 trillion, and they're growing at 6% a year, now all of a sudden they're at parity with a new asset base that didn't exist before. And I think that's the power of what's coming, is you're going to basically see newfound wealth because of all of this, where we have to migrate from an income-based economy to an ownership-based economy to address the fact that there's a huge sea shift in the nature of what work is available.
All right. So by the way, let's talk about some failures associated with huge institutions trying to get to and reach out to that next generation, right? So Goldman Sachs bought a few RIAs. It's gone basically nowhere. They started their bank. I forget what it's called. Goldman Sachs. There.
Goldman Sachs Bank.
Yeah. So
I have the credit card.
Right.
Yeah.
But at the same time, that hasn't made huge material impacts on their actual core business.
Oh, they lost money.
Correct,
Yeah.
right? So they haven't been able to execute. Now, to their credit, they see what's coming, right? But they don't necessarily know what to do. They don't know how to handle it.
Right. Well, they broke the first rule of retail lending, which is that any monkey can lend.
Sure.
It's getting paid back.
Correct.
That matters, and they went
Correct.
way too far down the risk curve.
Sure.
Because they wanted to basically take advantage of Apple's user base.
Yeah.
Not realizing that some of them can afford an iPhone, but they can't necessarily all afford to pay a 20 grand credit card bill.
Correct. Yeah. So there are smart people that work at these organizations whose focus is, where are we in 10 years? How can we avoid what we believe is coming in terms of decentralization and the next generation using completely different platforms, and frankly being anti-Goldman Sachs, anti-BlackRock? I don't want to have anything to do with them. So when I get control of this, I'm divesting all of that stuff and moving somewhere else, right? How do we as an organization avoid that? My point is their their efforts to this point to be able to pull that off, they haven't worked.
And that the irony of that statement should not be lost on people, because if you look at a Goldman or a Morgan Stanley traditionally, asset-based lending is a key mechanism for locking in high net worth clients. So what do? They go to retail and basically do, unsecured credit-based lending, right? And then they lose their shirts.
Yeah.
The future of banking for retail globally, in my opinion, is asset-based lending.
Yeah.
Right? It's going to be tokenized everything with the ability to borrow 35 to 50% of those assets. And if your LTV gets too high, the bank is, or whoever the bank equivalent is simply going to sell part of your assets.
Sure.
And that's how an ownership-based economy, in my opinion, it's not going to be about universal basic income, it's going to be about universal basic ownership.
Sure.
And that ownership is going to be tokenized. And that's why these ideas, again, it's more Trump branding, you may not like that, but the idea of those accounts that they're giving to kids ultimately is going to be tokenized assets that they're going to store in their Abra account, Robinhood wallet, whatever, and then have the equivalent of a credit line against them integrated with Apple Pay, Google Pay, that they'll be able to spend. And so the idea of a credit score should go away, in my opinion, long term.
It's all based on
It's all based on assets.
actual assets.
Exactly.
and they actually hold the collateral for the first time in history. My first conversation ever with Saylor in 2020, we were talking about Bitcoin, and he just kind of made this joke. He's like, I've got 5 yachts. They're parked all over the world. I can take a loan against the yacht. He's like, good luck taking my yacht.
Right.
Yeah.
Right? Go get it.
Right.
I'm sorry I defaulted. Go get the yacht. Right? But if it's Bitcoin, which is why people talk about it as pristine collateral,
Yeah.
it's already in the account and you just liquidate it, but that becomes everything.
Absolutely. That's what
I wonder if NFTs come back and you can,
I think
as,
they
as
do.
a part of that, and then also your house is in there and your car title and everything
That's
else,
right.
and not just your
Well,
securities.
by the way, unless anybody's noticed, the term NFT has been replaced by real world, tokenized.
Yeah, it's the same thing.
Tokenized, right.
Same
It's
thing.
the same concept, but the idea of that moniker sucks. Nobody wants to hear it ever again. Tokenized has become the
Yeah,
phrase.
the only difference between a stock and art is that there could be 1,000 shares
Yeah.
that all are fungible,
Sure.
and one painting that's not fungible. Hence the term non-fungible versus just token. But yeah, it's all about ownership at the end of the day.
One of the things that I love to try to peel back the onion on what Elon's doing, and he said something that I think we should all pay attention to, which is Twitter or X in the future will be a bank. He
there
looks
was
at
an announcement about X today or yesterday.
he looks at a network as being the backbone of the banking system going forward. So if you think about a communication network and you think about peer-to-peer payments, they go hand in hand. You don't need that third party anymore. And so as blockchain continues to be more and more prevalent and more people, I think that you're going to see a merge of the communication networks and the banking system into an unrecognizable new entity that no one really understands and hasn't seen before. And you're already starting. Robinhood has done a great job of gamifying and putting on in an app form, a user interface form that's very reminiscent of a social network.
All right. What did Robinhood announce this morning? Robinhood Social. You guys see it?
No, I didn't even see it.
Robinhood Social.
You're like a prophet.
Those guys, listen, man, those guys are on the cutting edge. They are on the cutting edge. So you're thinking that this is going to happen in the future.
It's happening.
Robinhood announced it this morning.
And
Robinhood
Mr. Beast
Social.
going the other way. I don't know. Is Mr. Beast basically trying to get into banking? Shamat Palihapitiya from All In, he's the chairman of Mr. Beast, I believe, and I'm pretty sure he's planted the seeds in his ear. Hey, look, with your audience, you could probably sell anything, and if you're going to be responsible, then let's set up, a bank, wealth advisor, whatever. Now, I don't know if that's going to work, but he certainly has the audience, right? And so it's part and parcel to what Elon thinks. He's aggregating the audience to get to the same place. Mr. Beast simply has his own, where he can basically sell
Audience
anything.
now is larger than the population of the United States.
It's
I've never looked, but I think I read that.
Enormous. The power of those YouTube influencers to do anything is just amazing. And Elon buys into the Chinese idea of the everything app, right? Which is very prevalent there. We tend to be a little bit more best of breed because of the nature of venture capital and whatnot. But you eventually get to the same place.
But think about how much value, like you said earlier, is being created digitally and yet the money or the payment system attached to that digital value is still being processed through paper, like wire transfer. And so you start to say, oh, okay, is the future of being an influencer or being a presence digitally where you have this massive network of followers, what's the purpose of it? What's the highest and best use? How do you capitalize on that to its greatest degree? Well, getting paid by YouTube isn't. I mean, are you
I
kidding?
can promise
So
you don't make a living
all-
doing that unless you're Mr. Beast.
All of these neobanks, whatever you want to call them, they ultimately still today all hook into existing bank cores through some issuing bank that lets them use their license. One of the most interesting meetings I had this week was with a kid, probably late 20s, who's raised several $100 million to build a first of its kind new type of bank that still has a traditional bank core, but is based upon hooks that are all crypto based, all smart contract, blockchain based. And that's going to allow him to do native stablecoin issuance directly to the bank core, facilitate a credit card acquiring with stablecoin settlements in a way that most traditional banks' heads would just spin.
Yeah.
And so now for the first time, and again, it's part of the initial discussion we had here on narrative, traditional finance players are starting to see the value in hooking into decentralized systems, which is super interesting.
Well, it's like home building. If you take a home that was built in the 90s and you try to bring it to up to date in terms of all the modern technology, it's impossible. You can't retrofit.
I just tried.
Yeah, that's what I'm
start
saying.
again.
You start over, and I think we're seeing the exact same thing being done on the banking level. Is you can try to retrofit your existing brick and mortar banking.
Easier to tear it down.
It's easier to tear it down and build a new one.
Exactly, especially in California.
By the way, Tom Lee's investment into Mr. Beast's organization, in this context, doesn't look so weird.
No,
or
it
stupid.
never did to me.
Yeah.
Never did. Now, he may not be successful at launching a banking brand,
Sure.
but it's not a bad bet if it's a small part of your portfolio, for sure.
It's a shot at a first market mover advantage that's too big to ignore.
Yeah.
I think that wins.
Yeah. I mean, with our type of product, I would kill for that audience.
Of course.
I mean, it would be
course.
like rocket fuel for us.
100%.
Well, I think the immediate future, listening to you talk about the technology and AI and wealth management and banking, is to have a fiduciary who's responsible, like an ABRA, but within that segregated
100%.
account, there's an AI agent that's managing your portfolio and doing it second to second or minute to minute rather than every 6 months rebalancing.
I think
so I think it's the
intuitively-
cross, because
100%.
I don't trust myself to run that.
That is so well said. I think intuitively the high net worth investor is going to want that very, very soon, if they don't already. And no one is in a position to provide that yet, and it's exactly where I think our business is going.
Yeah, that makes perfect sense. I know we've only got a couple minutes. Tell me, you're on stage today.
Yep.
What are you talking about?
Future Fund 1 and how to buy Bitcoin with as little risk as possible.
Good conversation. All right, well, we've got a growing crowd here and noise, so we're going to go ahead and wrap. Bill, thank you for coming over.
Always a
here
pleasure,
today.
man. Good to see you in person.
Always a pleasure, and we'll be back tomorrow, obviously back in Tampa at the studio, and we will see you then, and we'll see you guys on Tuesday, and you, I'm sure, very soon. Thank you, everybody. See you tomorrow.
That's dope.